In this video, I want to show you a really clever way to find under the radar meme coins that you can not invest in, but trade. Whereas investing means slightly longer term, but trading means you see an opportunity, you get in, you make a little profit, you get out. So here I am on Dexscreener.com, which is a platform where you can look up different cryptocurrencies, but also a platform where you can advertise your cryptocurrency if you have one. So our strategy in this video is going to see which are the meme coins and cryptocurrencies that are advertising, because you know they're getting a spike right now because of their advertising, and it's artificial. So as soon as they finish advertising, their growth may go down, but it usually won't drop like a cliff because everybody's going to be sitting there waiting for it to go up, and the hopeful people who are going to just lose their money. But what we are going to hope to do is ride the wave of while they're advertising, they're going to have a lot of momentum. So here's how you find the ads on this platform. On the bottom right, you see this little tiny word ad right here. That means this FI is advertising. It just so happens that I opened this screen, so I know about FI as much as you do at the moment. It's something that I've never seen before until this, and I didn't want to research it because I kind of wanted to go over it with you just so that you can see how I would get myself familiar with it, so that when you encounter new cryptocurrencies, you can go through the same process. So the first thing you would do is read their little blurb, which says the AI liquidity layer all-in-one DeFi infrastructure with live API SDKs to help developers build super cool crypto apps. Okay, so it's a bunch of buzzwords. I don't fully understand it just from this reading, but the all-in-one DeFi infrastructure and the liquidity layer means that maybe it helps other cryptocurrencies get up and running sooner. I don't know. But I bet you there are 300 other really small cryptocurrencies that likely have a very similar description. So let's look at their chart. The first thing you want to do is see how long has this been around. They talk about themselves so incredibly and pompously, okay, but if I look at the 5-day chart compared to the 1-month chart, compared to the 3 months chart, you see there isn't a 3 months chart because they started on the 10th of this month, and at the moment it's the 28th of this month. So they are 16-day-old cryptocurrency. Would you see they did a good job promoting because they had very, very slight growth, but a little bit higher, a little bit lower, a little bit higher, a little bit lower. They were able to have sustainable trading volume and activity, which is a positive sign. And then it looks like they started advertising. That first huge spike was around the 26th. Now we're on the 28th. And they're still advertising. So this right here, around the 0.00075, 73 to 72, this area could be good to jump in. What you'd look for is a couple of legs up, and then you would monitor the trading volume. You can see that they have about an 800,000 trading volume, which is pretty nice and healthy because you can see that little chart below the big chart. The little chart, you see they have a big spike in trading volume. And while the trading volume is doing pretty good, because you can see they started advertising, it looks like, and the trading volume picked up. This is the weekend. Right here we are on a Monday. And as long as the trading volume is up, you can invest, take a little bit of profit, keep a little bit more invested. If it goes up more, sell more, etc., sell on the way up. And then as soon as you see the volume dropped, that means a lot of their, not to zero, but to a substantial drop, then you'll see, oh, they probably stopped advertising. You technically don't own this cryptocurrency, so you cannot tell exactly when the owner pressed stop advertising in this platform, but you could tell by the drop in volume, because a lot of the volume is driven by the advertising. And as soon as there's a drop in volume, you sell all your holdings, because what the rest of the chart is going to look like is going to look like all the people who bought are going to be sitting there hoping that it's going to go up, but that hope is not substantiated by any reality. What's going to happen is like a spike up while they're advertising and people are jumping on because of FOMO and momentum. But as soon as they're going to stop fueling the growth, you're going to see like a kind of a logarithmic, meaning like a slow decline. Why is it going to be slow? Because there isn't some news. The only thing that happens is they stopped advertising, right? So nothing really changed. So people are going to be sitting there waiting, but you're going to be the first one to see, oh, the catalyst for growth stopped, which was the advertising. And then you get out. Some trades like this, you might take a loss. Some trades like this, you might break even. But what you're really looking for is, you see, the legs are pretty substantial. Here's a leg, it was 4. Here's a leg, it was 6, 8. That's a doubling. So it's okay to have a few swings and misses, or a swing and you might hit like a little success. But what you're really looking for is that, hey, doubled. They're still advertising. Okay, I can sell a little bit to lock in my profits, ride the wave a little bit more, etc., etc. As soon as that volume drops, you're out. Goodbye. You can still put this on your watch list. They have a watch list feature, so you can see what's going on with it. Because even before this, it looks like the team behind it is not bad, because they have been able to create some sustainable growth. Like you see, the lows are slightly lower lows, and the highs are slightly higher highs, slightly. But you can kind of see even the slight upward trend even before this big spike. So you could monitor this project long term, but in the short term, this is how you would profit from it. Now, one weird thing is that you'll see all the transactions. Maybe this is temporary, but all of them are like less than a penny transactions. This could be bot traffic. Here's a real transaction. This could be something else. It could be temporary. But you also want to watch for anomalies like this. Maybe this is them artificially trying to get the price to go up. I don't know. But in any case, looking for the growth catalyst, which is them currently running ads, is a good, very short-term trading signal, because these small tokens, they don't require a lot of buying and selling in terms of actual dollar value to double or triple. So it is very possible to ride that intraday wave, as you see literally from this chart. Now, this is about an hour after filming the previous video. And as you can see, we have another leg up to about 0.0013, which is, if you're looking at it here and just finding the opportunity here, it's doubling from here where we saw it earlier. And if you found it around like 4, then it's tripling from there. This is all within like 24 hours, doubling or tripling without getting greedy. Real chart, real A through Z walkthrough. You discovered this exactly when I discovered this. And what I'd be monitoring here is, look, you see the colorful chart has that secondary chart of the volume. And as long as the volume keeps going, and mostly you see there's a lot of little green arrows. It might be hard to see on your screen, but when you kind of zoom in or look on the original screen, it's easy to see the green arrows. And you see the buying is going to cause the green arrows. That's a great example of how you can follow the volume and find opportunities. And by the way, since this is replicable, this can be a viable strategy to try for a week or two with a few tokens and see how you do. Document your trades. Like, for example, bought $100 worth of this FI, sold half of my holding at this price, sold another quarter at this price, kept the rest, bought another one, sold another one. So you can calculate by the end of the week how you did. And after you do that calculation, you'll be able to tell, what if I made money, which means I can reinvest my winnings? Can I try that next week? You do the same thing next week. And either what's going to happen is, if you do this for maybe 2 months, 3 months, 4 months, and you see most weeks you're doing well, that gives you more data to decide, can you put more money into this, or how much of an investment would it take for this to become your viable job? If, let's say, you're able to take a certain percentage out every week to live on, but still have a relatively growing amount of money in your investment portfolio to trade and make a profit from. And that way you'll be able to see, is this a fluke, or can you make this sustainable and repeatable? And of course, if you can make it sustainable and repeatable, that's really great, because suddenly you no longer need to start a business to support yourself. You no longer possibly even need a job. As long as you can do this sustainably over many weeks and have repeated results that are objectively repeatable, not just you doing wishful thinking, well, if I made more here. No, like actual data that you can see looking back. Of course, sitting here, I cannot tell you, quit your job, quit your business, change your life. But you will be able to yourself determine what you can do by collecting data of your profits and losses and seeing whether you can become good enough to do this sustainably long term. Because if you can, This is one of the easiest businesses in the world. It's faceless. You don't have to do much work. All you have to do is click a few buttons every day, monitor these cryptocurrencies, and have yourself an interesting passive income business, or at least 90% passive income that you can do from anywhere in the world. Of course, having said that, keep in mind that day trading like this is a very attractive, but very often also misguided business, because people get delusional about the difference between what's really possible and what they're hoping for. So make sure you're disciplined in your decision making. And if you're truly disciplined and give yourself accountability and have other people look over your finances and trades and see, oh, this is sustainable or this is ridiculous, listen to external voices, because we can get carried away and very excited about such circumstances. Like we see the light at the end of the tunnel, like never have to work again. You start dreaming. You're not thinking clearly at that moment. So you need to bring in somebody else who is thinking clearly and give yourself time, weeks or months, to really decide, is this a full-time thing for you? Because even if the numbers look good in the short term, that doesn't guarantee they're going to look good in the long term. Things can change. So you need a lot of objectivity and data before you can make decisions of whether to do this more full-time or not. But certainly, as you see here from the chart, it is not outside the realm of possibility. It is inside the realm of possibility. And now I want to provide a very quick 24-hour update as we are following along this cryptocurrency FI. As you can see here, we were looking at this spike and it looked good. And then we had a drop here. Then we had another spike and I was thinking to myself, "Ooh, this is amazing." And then overnight, this precipitous drop down was happening. And before this leg up today, which has a higher high, I thought, "Ooh, maybe it's over for this cryptocurrency. It's really dropping," because this was a pretty steep drop from just about hitting 2, like 1.7, 1.8, down to below 1. So almost a 50% drop from the high to this low. And then we were right back up, doubling from this low. So what takeaways can we take for ourselves? Certainly, to not go insane during the very high drops, we can plan and establish selling points so that we don't get greedy. Because if we don't have those planned ahead of time, we're going to think to ourselves, well, a little more. If it goes a little more, okay, then I'll sell. And then it goes there. And okay, how about a little more? And then you lose the chance to sell. And then it goes down. Then you think to yourself, oh no. So if you can be disciplined, you can just sell off a little more after every big leg up. Give yourself a price point. I'm selling at 1, I'm selling at 1.25, I'm selling at 1.5, I'm selling 1.75, etc. And then some of your earnings you can just put away, invest in other things, or you can buy the dips if you like, because as you're monitoring, the volume hasn't really gone down. The volume is still good. Now you might think the meaty part of the rise here is done, but it's nearly impossible to predict. But what you could do to minimize your potential losses and keep the potential of high gains is the money that's house money, the money that's already your earnings. You can take 80% of that and say, hey, okay, I made a successful trade, put that away. But with the rest of that, you buy the dips, sell the spikes, buy the dip, sell the spike, so that you can keep taking very high risks with a little bit of the profits you already made. So even if you lose it, it's not a bad thing, but hopefully that gives you an idea for what's possible, because we found this at like right here, 0.0004s, and now it's, if it touches 0.002, that's 5x of where we found it 24 hours ago. Now, of course, you're probably never going to, in practice, buy so well and sell so well, but if you can at least get close to it, that's a tremendous win. And one thing that's really great and an investor's dream in smaller altcoins, meme coins, is the potential for that 1,000% spike, 10,000% spike. It's possible, but as investors, we often have a shared experience that, frustratingly, we only learn about it after the fact. Other people profit from the spike, somehow learn about it early, and then we learn about it. Oh yeah, look at that cryptocurrency, it spiked, but we missed out on it. this is the common experience where people don't actually know which cryptocurrencies are going to spike. So I want to introduce you to a cryptocurrency that I recently launched that has been growing steadily, and I'm rolling out a lot of promotional materials for it, and it's going to get a lot of publicity soon. At least I'm working on that. I'm an experienced marketer. But now it's still early. It's my SPRK, Spark cryptocurrency that I launched specifically with the aim of helping creators and entrepreneurs raise money. Think of it as Kickstarter or Patreon, but with cryptocurrency and taking advantage of many of the benefits of cryptocurrency. You can learn more about this project on sprktoken.com, which I'm showing you on the screen now, to learn about the many real-world benefits and utilities of this cryptocurrency. And what I want to show you now are some charts and price projections for this cryptocurrency based on calculations of ChatGPT. So this is not speculative information from me. These charts are going to come from ChatGPT. What does come from me is the actual growth and the ability to attract investors long term. But luckily, I'm a top 1% marketer online, having reached 1 million students on Udemy, and having large and engaged communities on other platforms as well. So I have exactly the right kind of background to grow a digital asset. So with that in mind, let me show you the actual price projection of this cryptocurrency so that you can see whether you might be interested in making an investment in it at this early stage at which it can still grow 1,000 or more %, which is not a guarantee, but a reasonable bet to make considering the risk reward. You might put in $20 or $25 or $50. That's almost nothing to risk. But if the reward is 100x or 1,000x, as you'll see from the price projections coming up, that makes it a great bet to take. And if you're interested in investing in this cryptocurrency, in the description of this video, I'll have a link to another video which shows exactly how to invest in this cryptocurrency. So let's look at the SPRK token growth path as it goes from 1/10 of a penny in price to, as you can see here, $1,000 per token and beyond. Yes, it's possible. So let me explain how it's possible and what is the underlying mechanism so that you understand how it works. The way such tokens work is that the organization that minted this token provides the liquidity for trading. In this case, there are 10 million tokens available for trading. That's what you see referenced here on the bottom left. You see 10 million on the bottom left on the x-axis, on the bottom axis. Then as 5 million tokens are left, 3 million, 2 million, the price goes up because supply of tokens decrease, the price per token increases. So you can see that while there are still about 10 million outstanding tokens out there, and the liquidity pool at the launch of this token was exactly 10 million tokens. So at that point, it's 1/10 of a penny. But as people buy up, you see here, even up to 5 million tokens, which by the way is not hard to do because it's 1/10 of a penny here. So with just $1, you can buy 1,000 tokens. So it's pretty easy to sell the first 5 million tokens, after which the price is still under a penny, but almost 10x from the initial launch price. So if you invest early in this, you get incredibly disproportionate results because even though this line looks linear, it's only because of how the line looks. The actual price growth is incredibly exponential because you see that after 5 million tokens are purchased, then after about 3 million tokens are purchased, here we are at the 1 penny per token price point, which is 10x of where it launched. Then as people keep on buying more tokens at 1 million remaining tokens in the liquidity pool, the price becomes approximately 50 cents. So now you went from 1/10 of a penny to 50 cents. That's an incredible return, but that's only the beginning. After this inflection point, the price appreciation increases dramatically because the journey from having 10 million tokens outstanding to 500,000 tokens outstanding is not a difficult journey, but you see it starts getting close to $1. And as you get closer to 100,000 tokens remaining in the liquidity pool, you start reaching the $50 price point. And as people buy up more tokens, obviously it's harder to buy them now because they're more expensive. the price increases. So the real exponential chart looks like this. You see, it's relatively slow growth, but if you want to get to a hockey stick, the moment until which you wait is when you have under 1,000 tokens remaining in the liquidity pool, and especially under 100, it really takes off. Now, at this point, it's really hard to sell a token because obviously a token is going to be worth 200,000, so it's not realistic. But to get here, it is realistic. That path is not difficult because at the moment of filming this video, as you can see the price growth here, there's only slightly over 9 million tokens remaining in the liquidity pool because some people bought early. And you can see that up to around the 5 million token mark, this token is incredibly cheap and you can get so many of them and profit from the next people investing after you. So imagine what would happen if you bought at a tenth of a penny or a fifth of a penny or at a penny per token, but then it went to $1. That's 100x your investment. $100 becomes $10,000. But what if you put in $100 very early? Then it becomes $100,000. What if you invest $500 very early and it goes up to $1 or a little more? That's $500,000. So $500 invested when it's still a tenth of a penny in not so distant future. Obviously, there are risks, but there is a light at the end of the tunnel for how the growth can happen. That $500 that you might invest at a tenth of a penny can become $500,000 when the token price reaches $1. Because to go from a tenth of a penny to $1 is 1,000x. Which brings me to the point that even though there is risk, you might just lose some money. Although it's nearly impossible to lose a lot, because if you get in early, the price can't go below this price point of a tenth of a penny per token because that's the price at which it was launched, which is what the liquidity pool that was created allows. So the potential loss isn't that great, but if you can make a bet of 1 to 1,000, that's a good bet to make. So hopefully this visually illustrates the light at the end of the tunnel and how early investors can benefit from owning this token. So with that, of course, I welcome you to become an early investor and profit from the growth of this token.